Okay, so first week in the markets of 2024 is done, and here I am looking at the DXY for the start of the year. So this candle here, you can see here we opened up and straight away we pushed higher. There was the low of November. I had that marked up last week. You see we've came back up into here. Now, when this happens, so when you've got a low, you've got a candle that's passed through, or in the opposite direction, you could have this in a bullish scenario. This is a bearish scenario. So we've opened up, we've came, and this is an immediate rebalance. So where you come up and touch into this previous month's low or high, that's a sign of being, in this instance, really bearish. So that's an instant rebalance, and we'll actually see here that we closed that low there. We closed last week below there, so that's quite bearish as well. If this was a monthly scenario, because these are monthly candles, and that just closed in there, then to me that would be a really bearish sign. I'd be saying, right, yeah, the next month we might travel up a wee bit, but we're coming down. But this is a weekly low, a weekly close really, because we just had last week, so it's not quite a month yet, although this is the monthly low. So exactly what I wanted to see. So for my thesis, if you like, I'm saying I think we're going to come up, we're going to make a high on dollar, and then we're going to be bearish on dollar for pretty much the remainder of the year. So I said to a couple of the guys that I'm in a group with on our group chat when price action last week on Friday, which if we go back and look, Friday, so we had non-farm payroll and we seen a reversal, and I said to them, this might sound mad, but I think that could be the low of the year, and we're only in the first week. So we had this on DXY. If we come down opposite, so we were a bit closer here. I'll take away these drawings just now. We were a bit closer. So here was the previous month, and that was where we closed. So there was a smaller gap in here. But again, I talked about this fair value gap. I don't see this getting traded to. To be honest with you, I think we're just coming down. I really think this could be the low of the month. There's one slight scenario. So again, you've got to be able to adapt in the markets. You've got to be able to be fluid in order to be successful. So if I go down to the weekly, in here I'll show you. So this was the low, right? But if I go to the daily, actually, you'll see we've still got this fair value gap in here that could potentially be a draw. I don't think it is. I think this might get left, but probably come Thursday next week, I'll probably say yay or nay whether this is getting traded or not. If this data comes out, CPI, I think CPI is going to come in lower. That will surprise everybody and come in lower, which will bring the US dollar down and push the euro higher. But in the event that it doesn't, I'll let that news play out. I'll see how we go, and if it comes down into this area, I'm probably going to be a buyer. I'll probably put a buy order in, because I still think that, okay, next week we've got Monday, Tuesday, Wednesday. Sorry, Monday, Tuesday. There's a bit of news on the British pound on Wednesday, so nothing really in euro. So Monday, Tuesday, Wednesday, we could end up just sort of moving about in here, come lower, and then the news could run down again and then push higher. But probably as Monday, Tuesday, Wednesday plays out this week, I'll probably then have decided what I think is going to happen with this news here on the Thursday, because CPI is quite a big one. So I think that could see a large range move as well. So I'll see how that goes. But I'll go back to DXY and I'll just show you what happened on DXY. So I'll just look at the weekly again. So we were here. I've marked up a couple of areas of interest. This here where you've just tapped in is institutional order flow. So again, I said this to a couple of the guys I'm in a group chat with. I feel like the scene has been set now for institutional order flow. So here's institutional order flow. Down here, we've got this fair value gap in here between this candle's low. Take these drawings off just now. Oops. There. This candle's low, this candle's high, fair value gap. SIBI price ran up into here. You'll see if I hover over here, up at the top left there, just up in this area here, you'll see the high of that candle. So H 103.101, and if I come to the low of this candle, the low is 103.064. 103.064, and the high 103.101. So this actually came just above this old low, but it's now filled in this whole fair value gap. So to me, this is order flow. So we just tapped into this fair value gap, and now we've filled in this fair value gap. To me, this is now order flow. But like I say, we'll see what this data brings. That'll really cement, I think, my theory that this is the high of the year, and conversely on EU that it's the low of the year. So I don't think Monday I'm probably not going to be a trader. I'll probably watch Tuesday, Wednesday, Thursday. I might just let this play out. If there's any real clean setups, then I'll take them. But I'm more interested in sort of my thesis and sticking to the idea that I've got until that's broken. There's levels, this is what I do every week. So I'll look for invalidation levels. So I'll have my idea. If this happens, then I was wrong, but I can adapt in the market and I can change quite quickly to come back on side. And if you're able to set these areas, then you're doing pretty well, that you can stick to and then sort of adapt as you need to. So I'm going to put these drawings back on. So on the US dollar, what happened last week? One day, bring this bigger. So on the daily, between this candle's high and this candle's low, there was an imbalanced price range. Now, in order for this to be balanced, we need to see buy side offered again. So this was buy side delivery, this was sell side delivery. For this price leg, for this range to be balanced, it needed to get offered buy side once more, and that's what happened here. So if I didn't have this on my chart, you might look at that going, why on earth did that just come up and randomly stop there? But in actual fact, it's not random. It's the algorithmic price delivery. So I had this volume imbalance marked up as well on my chart. I thought when this high was created here, this is like inducement. So I was thinking, yep, I think we'll probably get a push higher up into here and then we'll roll over. So what actually happened is we got a bit more, excuse me, we got a bit more animated up into this imbalanced price range. Now, there's also a volume imbalance here on the monthly. If I go back up to the monthly, you'll see that volume imbalance now. Just here, between these two candles, at the volume imbalance, where there's a gap between the two candle bodies. Now, that could also act as a draw for price. I want to sort of pull there, but I think that's probably going to stay open, to be honest. and you do get them where they stay open. They don't need to be traded to immediately. It's just, I'm just trying to see if there's any other examples of where there would be a gap that gets left. So like right here, there's a volume imbalance there. And that just gets left and it'll get traded to at some point, probably next year or two. It will act as a draw for price. So back to here. One day, I'll do the weekly. So the weekly candle pushed up, hit this area. One day actually, because that's what most of it's on. Okay, so touched up into here and then came lower. Now, because I've got the idea that price, let me take this off here, that price is going to, in DXY dollar, it's going to come higher and come higher first, open, high, low, close. So when this opens up here for the month and starts running up, I'm thinking, okay, I feel like this is probably correct, because you would normally find that there's what you call a Judas swing. There'll be the initial move, which is the fake move, and then the real move happens. So I like this. I like the fact that we've done this last week. We came up, tapped into the other left. So if I go down and just show you in the 4 hour, maybe the 1 hour, 60-minute chart, what happened exactly. So here it is. So price came up into this volume balance, and then you'll see here half past Phillips. I've got it marked up as New York time. So it's 8:30 in the morning, this news, but it's actually 1:30 in the afternoon in the UK. So it wicks up into there and then it comes lower. Now, this is a break-in structure, a break-in market structure, and it's actually on the 4 hour. So we've came way lower, break-in market structure. I see here there's a fair value gap, and there's actually, I think, between that candle's high. No, it's not. It's fine. So between there and there, that's actually fair value gap, and this is something that could be traded to next week. So we actually had quite a decent retracement back up into the range, and in actual fact, if I was to take the range from the high to the low, just pull that out a bit. You'll see if I make up PD, we zoom in a bit. We've actually not tapped into 50% of that range yet. We were just below it here. So in terms of premium and discount, price will still want to come up into a premium and then roll over. So again, as we think about next week, so if we think about the power of 3 concept, if we think about the open, high, low, close, so I'm expecting next week to be bearish on the dollar. So that means that I would expect or anticipate, price to come up higher in the first part of the week and then roll over and come lower. That's the nature, usually, of how things work. So, how does that look on the euro? So, we had it the opposite way. So, what actually happened was initially there was this tap into this volume imbalance, the weekly volume imbalance here in the weekly time frame. But like I say, we've left this sort of just sitting here. So it does make me think that there's a chance that we want to come back and take this low, because people will have went long. So could there be another little flush out before we actually get the real move? Quite possibly. I just don't see it with the data. I can't see this. The data surprising me and coming in lower. But again, I think I said this last week. I'm not expecting to be right 100% of the time. I've got ideas. I'm not married to my bias. It's just an idea, and if I see things changing, then that's when I say, all right, okay, I was wrong. But I've not lost anything, because you've got risk management in place. You're only taking a trade when you're sure in the market, and there's no point when you think something's going to happen. You need to have that assurance in your own analysis to let you go into a trade. So this is all just theory, and we'll see how the week plays out and what's on offer, if anything. But we come to the 60-minute one here, which take these drawings off. Actually, they can be quite distracting at times, but they are beneficial. So exactly that. We've got this sweep run of liquidity. We've got the sharp push away. We've got a break in market structure to the upside. And in here, sorry, I'll come back on with the drawings, but if we mark 50% of this leg, so we actually have tapped in the 50% on Euro USD, but we've not quite done it yet on. So on the 4 hour actually, so we've not quite done it yet on DXY. If I come back up here, you'll see we've actually got this 4 hour fair value gap. I don't know why I've left it as that colour, to be honest. That's a fair value gap there in there, and then down here in there there's another fair value gap. But in actual fact, what I'm interested in here is imbalanced price range. Okay, you've now got, this was an imbalanced price range as well, so it came down, travelled through, it's travelled back up. That's kind of irrelevant now, but this imbalanced price range now. So what will happen here, if I see price come down into this imbalanced price range, if I see it respect this level and move away in the first day or two this week, then I'm probably going to be more bullish, because this imbalanced price range currently, if we then come down, respect it and move away from it, that becomes a balanced price range. Okay, at that point I'll change this to a balanced price range and just change it there. We're also inside a daily balanced price range in here just now. So I would be more likely to say, right, I think my analysis is correct again. If say Monday, Tuesday we come into here, Wednesday we move away from here, and then when Thursday comes and CPI is going to be released, I would probably be a bit more confident in my analysis, thinking, well, this is now a balanced price range. We don't need to come back here, and we then push away and move higher, and the first target would be this high here. But I am open to the idea that we want to come down into the daily fair value gap, because this just hanging above this fair value gap makes me think, yeah, there's a good chance we do want to come down there, but I just don't see how the data will allow it. So that's kind of what I'm looking for next week. But again, so you think about this week, if I do 60 minutes, okay, if I could mark you the Monday's open, Sunday, it was the first week of the year, so we opened up here, we didn't really have a rally up, we just came down, so we had an open, we didn't have a high, we had a low here, and then we rallied back up and we had a close back inside the range. So it's almost a power of 3, except we didn't really get a rally up, and that'll be visible if I was to go to the weekly. Just what we talked about, so there wasn't really there. You'll see you just got a slight wick higher and then a move down. So to me, this is everything I wanted to see initially, and I don't see why we need to come any lower. I don't think we're going to come as low as here to take this liquidity. The only real inefficiency is the daily fair value gap, which again, I think might not get traded to, and then we'll just wait. I'll see, be patient. You only really want to be, it only takes a couple of trades the whole month. And as long as you can sit there and map things out to the point where you're really happy in your analysis and you're ready, when you see what you want to see, you're able to enter and you're able to protect your capital. You've got your stop loss there to protect you. You're not over trading. You're just being patient. You're waiting. You know what you want to see. That's a whole different ball game, that. So that's kind of the analysis I'm expecting now. We've taken liquidity underneath, which I said last week. Now it's liquidity above. So this is still my overall draw from liquidity. And I think we get there pretty soon. If there's any questions about this, then please do give me a message. I'm happy to answer any questions that anyone's got. I don't have a problem with that. Okay.